Welcome to the Deep Dive.
Great to be here.
Today, we're diving into something pretty complex.
Yeah, the regulatory side of things.
Exactly. Specifically, how core banking systems, the real engines of a bank, are regulated across Southeast Asia.
It's a tricky landscape.
We've got some great material, especially Victor Leung's report, Regulatory Frameworks for Core Banking Systems in Southeast Asia.
A very thorough piece of work.
So think of this as your shortcut, your way to get a handle on the key rules for vendors in, 5 key markets? Singapore, Vietnam, Thailand, Malaysia, and Indonesia.
Right. And it covers the whole spectrum: retail banks, commercial, the new digital-only ones, and sometimes, crucially, Islamic banks, too.
Which adds another layer.
Definitely. Each country has its own regulators, its own frameworks. It's not one size fits all.
Not at all. So your mission, if you choose to accept it, is to come away from this deep dive with a clear picture of the main regulatory hurdles, the things vendors really need to know. We want to cut through that complexity for you.
Make it digestible.
Without getting totally overwhelmed.
And there's a lot to cover. I mean, we're talking about data residency, where the data actually lives.
Crucial.
Protecting personal data, PII. System uptime, how reliable things have to be.
What happens when they go down?
Exactly. Notification duties. Then there's Sharia compliance in some places.
Big one in Malaysia and Indonesia.
Huge. And of course, cybersecurity. Certifications too. It's a full plate.
Okay, let's dig in. Where should we start? Singapore.
Makes sense. Often seen as a benchmark. The main player there is the Monetary Authority of Singapore, MAS.
Central bank and regulator rolled into one?
Pretty much. And you've also got the Personal Data Protection Commission, the PDPC, for data privacy stuff.
Right. And MAS has some key guidelines, don't they?
They do. The big ones are the Technology Risk Management, or TRM, guidelines from 2021.
Okay.
And importantly, there's now a legally binding MAS notice on TRM that just came out in early 2024. So that's very current.
Makes the guidelines even more serious.
It does. Then you have the outsourcing guidelines from 2016, super relevant for core banking vendors.
Naturally.
Business continuity management expectations are high. And they've got the digital bank framework, too.
Okay. Now, data residency. Does Singapore insist everything stays on shore?
No, not strictly. That's interesting. They don't mandate local data centers. But, and this is a big but, if you want to outsource data offshore, especially cloud, banks have to do rigorous risk assessments.
To prove it's safe.
Exactly. Prove it won't hinder MAS oversight or risk secrecy. And the PDPA, the Data Protection Act, kicks in.
So data transferred out needs equivalent protection.
Equivalent protection, or you need explicit consent. So while offshore is possible, you have to jump through hoops. It makes you think twice about control.
Makes sense. What about handling the personal data itself, PII?
Huge focus. The PDPA from 2012 is key consent, purpose limitation. You know the drill.
Standard stuff, but important.
Plus, the Banking Act has strong confidentiality rules. Vendors handling this data. They're bound by contracts and law.
So encryption, access controls.
All expected. MAS expects banks to ensure their vendors are using strong controls, keeping customer data separate and secure.
And storage. How long do they need to keep data?
Well, the anti-money laundering rules say at least 5 years for transaction and customer records, after the account's closed or transaction happens.
So core systems need good archiving.
Right. Easy retrieval, too. MAS wants to see records quickly during inspections, even if they're digital. No need for paper, but access has to be fast.
Okay. Now, uptime. I hear Singapore's really tough on this.
Oh, they are legendary. Unscheduled downtime for critical systems, maximum 4 hours.
4 hours total.
Total, in any 12-month period. And your recovery time objective, the RTO, if something does go down.
Let me guess. 4 hours.
You got it. 4 hours to get it back online.
Wow. And if you breach that?
MAS steps in.
Yeah.
Supervisory actions, could be independent reviews, could even be higher capital requirements for the bank. Penalties.
So vendors need rock-solid systems.
Absolutely non-negotiable in Singapore.
What about telling MAS if things go wrong or if you're making big changes?
Incident reporting is super fast. Within 1 hour of discovery for major issues.
Well, 1 hour.
Yep. Planned stuff like routine maintenance is usually internal, but big things like material outsourcing or switching core banking vendors.
They want to know.
Definitely. And inform them early. They don't always need to formally approve, but they want to be kept in the loop. Understand the risks.
Okay. Shifting gears, slightly Sharia compliance. Does that apply in Singapore?
Actually, no. It's interesting. Despite being a global hub, the Islamic banking footprint is relatively small there.
So no specific Sharia IT rules.
Correct. Any Islamic products fall under the general MAS rules. So vendors don't have that extra layer of Sharia tech compliance to worry about in Singapore.
Good to know. That's a key difference from some others we'll discuss.
Exactly.
Finally, for Singapore, cybersecurity, IT risk, certifications. MAS is strong here too, right?
Very strong. The TRM guidelines are packed with cyber requirements. There's the notice on cyber hygiene mandates, things like MFA, patching.
Basic but essential.
Right. Incident response expectations. Report in hours, root cause analysis in 14 days. They expect regular penetration testing, audits.
And they can audit the vendors directly.
They reserve that right, yes.
Yeah.
It all aligns closely with international standards, especially ISO 27701.
Is ISO 27701 mandated?
Not strictly mandated by law across the board, but it's very commonly expected. Same for PCI DSS for card data.
So good practice equals expectation.
Pretty much. Things like ISO 22301 for business continuity, maybe ISO 27032. For cyber guidelines, they add credibility. Shows you're serious.
Right. So Singapore, stringent, well-defined, high expectations.
That sums it up well.
Okay, let's pivot to Vietnam. Quite a different picture, I gather. Key players are the State Bank of Vietnam, SBV, and the Ministry of Public Security, MPS.
Yeah, Vietnam definitely has its own flavor. More localized in its approach often.
And the key rules.
You're looking at SBV Circular 18 from 2018 that covers system classification, cloud use. Then the Law on Cybersecurity from 2018 and Decree 53 from 2022. Those are big on data security and localization.
Localization sounds key there.
Oh, it is. And then there's the newer draft Personal Data Protection Decree from 2023. So things are still evolving on the privacy front.
Okay, back to localization. Data residency in Vietnam, is it strict?
Extremely strict tendencies, yes. The cybersecurity law and Decree 53 basically require local storage of Vietnamese users' personal data.
For everyone. Foreign providers, too.
Yep. And Circular 18 effectively means cloud providers serving banks need a local legal entity.
So offshore core banking is difficult.
Very difficult. Impractical, really. Vendors pretty much need to plan for local data centers in Vietnam or partner with local providers. It's a major strategic point.
Got it. And handling the actual personal data.
The new draft decree looks a bit like GDPR consent, data subject rights, rules for sensitive data. And the cybersecurity law already requires protection and security. So high level of care needed, ideally storing it locally, no sharing without proper authorization.
Storage duration. How long do records stay in Vietnam?
Practice is often quite long, maybe 10 years for financial records in general banking. AML rules require at least 5 years for ID and transactions.
So systems need long-term archival again.
Definitely. And secure backup and recovery. And given the localization rules, those backups might need to be domestic too. Infrastructure choice matters.
Right. System reliability, downtime, SBV expectations.
For important information systems, which core banking certainly is downtime, shouldn't tap 4 working hours per incident.
Per incident. Any annual limit like Singapore?
Not publicly stated in the same way. No specific penalties are advertised, but they expect minimal downtime, frequent or long outages. You get SBV attention, likely intervention.
So robust systems are still crucial.
Absolutely essential. Failover, disaster recovery critical.
How about notifications? Telling the SBV about problems or changes?
General expectation is prompt reporting of major incidents, especially if customers or data are affected.
Makes sense.
Big planned changes, like migrating a core system, that often needs SBV approval or at least prior notification. You consult them well in advance.
Okay. Sharia compliance in Vietnam, is that a thing?
Nope, not currently. No significant Islamic banking sector there.
So vendors can focus just on conventional rules.
Correct. That simplifies one aspect compared to other places.
Good to know. Lastly, for Vietnam, cybersecurity and certifications.
Okay, Circular 18 has security rules based on system importance. And remember, banking is critical infrastructure under the cybersecurity law.
Meaning potential government audits?
Could happen, yeah. They expect cyber incidents reported too. Certifications, not legally mandated.
But helpful.
Very helpful. Voluntary adoption of ISO 27001 PCI DSS is common, preferred. And Circular 18 hints, SBV likes independent audits for cloud providers. Shows strong security.
So Vietnam, strong localization, cautious on offshore tech, government oversight on cyber.
That's a good summary. Very focused on domestic control.
All right, let's move west to Thailand. Overseen by the Bank of Thailand, BOT, plus a PDPC for data and a National Cybersecurity Committee.
Right, Thailand. Another unique setup. Key regulations include a BOT notification from 2016 on IT. Outsourcing this one requires prior BOT approval for strategic functions.
Outsourcing core banking sounds pretty strategic.
It generally would be, yes. Then there are BOT's own IT security guidelines, the Virtual Bank Framework from 2022-23, requiring independent IT systems for them.
Oh, okay.
And, like others, a Personal Data Protection Act, PDPA from 2019, and a Cybersecurity Act, also 2019.
Data residency in Thailand. Is it strict like Vietnam?
No, this is different again. Thailand doesn't have explicit data localization laws for banking like Vietnam or Indonesia.
Interesting.
The PDPA restricts cross-border data transfers, yes. You need adequate protection or safeguards in the receiving country.
So BOT doesn't mandate local hosting?
Not outright, but they do consider risk, data criticality, recovery capabilities when banks use offshore services.
So local might still be seen as safer?
Often, yes. Lower risk from the bank's perspective, perhaps easier to demonstrate control to BOT, but it's not a hard no to offshore like in some neighbors.
And personal data handling under their PDPA?
Similar principles to GDPR again. Consent, data subject rights, breach notification. Banks need agreements with their processors, like core banking vendors.
Standard processor agreements.
Right. And those conditions for cross-border transfer under PDPA Section 28 adequacy or safeguards are key if data does leave Thailand.
Data storage and retention in Thailand?
AML rules. Minimum 5 years for customer ID and transactions. General business practice is often 5 to 10 years for financial records.
So systems need that flexibility.
Exactly. Configurable retention policies are important to meet both regulatory needs and PDPA considerations, which might vary by data type.
Downtime and incident reporting. How does BOT approach this?
They focus more on service continuity and prompt incident handling, rather than hard downtime limits like Singapore or Malaysia.
So less about the clock, more about the response.
Sort of, yeah. They do require immediate reporting of major IT disruptions, especially if customers are affected.
And big plan changes.
The BOT expects to be informed in advance for things like core system upgrades. But it's less about hitting a specific downtime number, more about managing the situation well. Prolonged issues would still definitely raise concerns.
Okay. Sharia compliance in Thailand.
Like Singapore, not really a factor. The Islamic banking sector is very small.
So vendors don't need specific Sharia features for regulatory reasons there?
Correct. Focus on conventional banking rules.
Got it. And finally for Thailand, cybersecurity and certifications.
BOT has its own IT security policy, aligns closely with ISO 27001. The PDPA requires security measures for personal data. The Cybersecurity Act allows for potential government audits of critical infrastructure, including finance.
So multiple layers of oversight.
Yes. BOT wants immediate notification of cyber incidents, encourages cyber drills, certifications. Not explicitly mandated by BOT.
But preferred.
Generally, yes. ISO 27001, maybe ISO 20000 for IT service management, are looked upon favorably. PCI DSS is a must for cards, obviously. Aligning with BOT's IT audit guidelines is also good.
So Thailand sounds more risk-based, focused on international standards, data protection.
That's a fair characterization. Flexible on location, but high standards expected.
All right. Moving on to Malaysia. Bank Negara Malaysia, BNM, is the key regulator, plus the Personal Data Protection Department, and a big Islamic banking sector, right?
Absolutely. Malaysia is significant for Islamic finance, and BNM oversees both conventional and Islamic banks. It's a dual system.
Makes it complex, key frameworks.
Very comprehensive. BNM's Risk Management and Technology, RMIT, is central. Issued 2019, updated 2023. Crucial document.
RMIT. Got it.
Then BNM Outsourcing Guidelines from 2018, also updated. Requires prior BNM approval for material outsourcing.
Like core banking again.
Almost certainly considered material. Then there's the Sharia Governance Policy 2019 for Islamic banks, very important.
Okay.
The Digital Banking Framework. And the Personal Data Protection Act, PDPA, from 2010.
Data residency in Malaysia. Strong preference for local.
Very strong preference, yes.
Yeah.
BNM approval needed for material outsourcing, especially cross-border.
Isn't offshore allowed at all?
Permitted only if risks are fully addressed and BNM access and oversight are guaranteed, which is a high bar.
And the PDPA.
Restricts overseas transfer without consent or equivalent protection. So bottom line, vendors likely need a local data center, or at least a secondary data copy in Malaysia. Local presence is strongly favored.
Makes sense. Personal data handling.
PDPA 2010 basics. Consent, protection, rights. Plus, BNM has strong secrecy provisions under the Financial Services Act and the Islamic Financial Services Act.
Extra layer for finance.
Right. Vendors often need to sign specific confidentiality undertakings, follow sectoral guidelines for sensitive data.
Data storage and retention period in Malaysia.
Generally 6 to 7 years for transaction and customer records, driven by AML-CFT rules and the Companies Act.
Longer than Singapore's 5.
A bit longer, yes.
Yeah.
RIT also demands complete audit logs. And for Islamic banks, the Sharia governance framework might require retaining Sharia-related documents too.
Okay. Now, downtime. I heard Malaysia is also very strict, maybe even more than Singapore recently.
You heard right. RMIT is very specific and strict. Maximum 4 hours cumulative downtime per year for critical systems.
Okay, same as Singapore cumulative.
But only 2 hours maximum per single incident.
Tighter per incident.
Exactly. And B&M enforces this. They actually fined institutions in August 2024 for breaching these limits.
Wow, they mean business.
They do. And disaster recovery. RTO is also very tight, no more than 2 hours for critical systems.
2 hours RTO, that's demanding.
Extremely. Requires very high resilience.
Notifying B&M about downtime or changes?
Prompt notification required for major IT incidents. And planned core system replacements or migrations. Generally need pre-approval from B&M as material outsourcing.
Pre-approval, not just notification.
Correct. It's a formal step.
Sharia compliance. Clearly critical in Malaysia. What's the core message for vendors?
It's not optional for Islamic banks. It's a legal requirement under IFSO 2013. Oversight comes from the bank's own Sharia committee and nationally.
So the core system must support Islamic products.
Absolutely. Product structures, accounting principles, and the bank's Sharia committee will need to review and approve the system or any major changes affecting compliance. Vendor needs to engage with this.
Big hurdle if you're not prepared.
Definitely a key differentiator for vendors in Malaysia.
Lastly, for Malaysia, cybersecurity and certification.
RMT is the key document here too. Covers governance, baseline controls, mandatory regular penetration testing, reporting cyber incidents within hours.
Sounds thorough.
Very. And banks are responsible for ensuring their vendors meet these RMIT standards. The 2023 update added specific cloud security controls too.
What about certs like ISO?
Not explicitly listed as mandatory in the law, but ISO 27001 or a SA2 Type 2 report effectively expected. It's the benchmark.
And data centers.
Tier 3 or 4 certification is often sought. PCI DSS for cards, of course, and ISO 2230111 for business continuity aligns well with the strict RTO-BCP requirements.
So, Malaysia, strong local preference, very strict uptime DR via RMIT, and critical Sharia integration.
You nailed it. A very structured and demanding environment.
Okay, final stop. Indonesia. Regulator is OJK, Otoritas Jasa Keuangan, with Bank Indonesia handling payments.
That's right. OJK is the main financial services authority. Indonesia also has comprehensive rules.
The D frameworks.
OJK Regulation 11 from 2022 is a big one, covers lots of IT rules for banks. OJK Regulation 9 from 2016 on outsourcing. OJK Circular 29 from 2022 on cybersecurity.
Okay.
And very importantly, the new Personal Data Protection Law from 2022.
Data residency in Indonesia, another strict one.
Yes, very strict. Regulation 11/2022 basically requires banks to locate data centers and disaster recovery centers in Indonesia.
Default is local.
Default is local for all banking systems, unless OJK gives specific permission otherwise, which requires going through an approval process.
So assume local DCs are needed.
That's the safest assumption, yes. Strong push for onshore control.
Personal data handling, especially with the new law.
The 2022 PDP law brings in GDPR-like principles. Consent, rights, security measures. This runs alongside existing banking law secrecy rules.
So vendors need PDP compliance programs.
Absolutely. How they handle customer data for banks needs to align with this new law. It's a big focus area now.
Data storage and retention.
Generally over 5 years is common practice. AML rules need at least 5. Some laws might push towards 10 years for certain things.
And logging?
OJK's IT rules demand logs of all IT activities, and banks must be able to provide data to regulators easily. So systems need good logging and archival.
Uptime and downtime limits in Indonesia?
OJK expects near 247 operations for core banking. No specific public limits like Malaysia, Singapore, perhaps, but significant outages, especially impacting customers like ATMs.
Leads to sanctions.
Very likely. Banks aim high, often Tier 3 reliability. Regulation 11 probably implies short RTOs are expected, even if not explicitly numbered in hours publicly for all systems.
Incident reporting and changes.
Banks must report cyber incidents to OJK under that cyber circular. Major system failures go swiftly to OJK banking supervision.
And planned changes.
Major IT changes like a core system switch often require OJK notification or approval. Regulator wants visibility.
Okay. Sharia Islamic banking in Indonesia. Huge market, right?
Huge. High relevance.
Oh.
OJK and the National Sharia Board, DSN-MUI, ensure compliance. Each Islamic bank has its Sharia Supervisory Board.
And they vet the core system.
Yes. The system must support Islamic product structures. The Sharia Supervisory Board will review it to ensure it meets principles. Vendors absolutely must cater to this if targeting Islamic banks there.
Another market where Sharia capability is critical.
Definitely. Alongside Malaysia.
Finally, for Indonesia, cybersecurity requirements and standards.
OJK Cyber Circular 29 requires annual cyber risk self-assessments, dedicated cyber functions in banks. Incidents reported to OJK.
Technical standard.
Requirements generally align with international standards. Bank Indonesia also has rules for payment system security. Emphasis is often on best practices.
So certifications are important.
Very much so, even if not always legally mandated on paper. Banks often insist on ISO 27001, ISO 22300. OJK might ask about them during approvals.
And PCI DSS.
Essential for cards. And given the local data center rule, things like Uptime Institute tier certifications for those DCs become relevant too.
So Indonesia, strict localization, new PDP law focus, major Sharia component, and emphasis on best practice certs.
That captures it well. Strong local control, significant compliance needs.
Wow. Okay, we've covered a lot of ground across 5 very different markets. Stepping back, what are the headline differences and similarities?
The localization rules really stand out, don't they? Vietnam and Indonesia are the strictest default as local.
Right.
Singapore is nuanced, risk-based offshore is possible but regulated. Malaysia has a strong preference for local, needs approval. Thailand is more flexible on location, but PDPA governs transfers.
Big variation there.
Then uptime. Singapore and Malaysia are explicitly strict with defined limits and enforcement. Others expect high availability, but maybe less prescriptive public rules.
Sharia.
Critical legal requirement, essentially, in Malaysia and Indonesia. Not a regulatory factor in the others for core systems. Huge dividing line.
And cybersecurity.
That's the big similarity. Universal priority. Trend towards international standards like ISO 27001 everywhere, even if enforcement or specific mandates differ. But everyone takes it seriously.
So the need for a tailored approach is clear.
Absolutely. No way around it.
So for the vendors listening, trying to navigate this, what's the essential takeaway?
The bottom line, one size fits none. You need a nuanced country-by-country compliance strategy.
No shortcuts?
No shortcuts. You have to consider data residency laws, uptime expectations, incident reporting, cybersecurity frameworks, and definitely Sharia law in Malaysia and Indonesia. Deep local understanding is paramount.
Get the details right for each market.
Exactly. It's complex, yes. But it's navigable if you do your homework and get local expertise involved.
Absolutely. Well, that was quite the deep dive. Hopefully you listening now have a much clearer map of this complex regulatory world for core banking in Southeast Asia.
It's intricate, for sure.
And the key insight really is that tailored country-specific compliance is non-negotiable. It touches everything. Data location, Sharia finance, uptime.
Which leads to a final thought, perhaps. Given all this complexity, these different national priorities, how might regional or international regulatory harmonization evolve?
Good question. Will we see more standardization making cross-border tech easier?
Or will national sovereignty, specific local needs, data protection concerns, continue to drive divergence, maybe making it even more complex for global solutions?
It's that balance, isn't it, between national control and global tech efficiency, something to definitely keep an eye on.
For sure. A fascinating space to watch.